Hi, everybody. Welcome to Birchal's webinar today. My name's Emily. I'm from the Birchal team and welcome Matt Vitale. Thank you all so much for coming. So today's webinar, before we get started, I'd like to acknowledge the traditional owners of the land in which we are coming from today. Birchal's based on the land of the Wurundjeri people of the Kulin Nation, and we pay our respects to their elders past, present and emerging. So thank you so much for coming today, Matt. Matt, if you don't know him, is the CEO and co-founder of Birchal. So Birchal Pty Ltd, the issuer, is undertaking this offer on the Birchal platform, birchal.com, using Birchal Financial Services, or we may refer to it as BFS, as the CSF intermediary or the gatekeeper. So this offer will be managed in accordance with BFS's standard operating procedures. So for those of you who are new to crowdsource funding, or what you may know it as equity crowdfunding, it's a relatively new form of fundraising in Australia, and it allows startups and small businesses to raise capital from a large number of smaller or retail investors, as well as wholesale and sophisticated investors through an online platform. In this case, that's Birchal. So instead of seeking funding from traditional sources, such as, say, a bank or a venture capitalist, companies can turn to the general public, often their communities, to raise money in exchange for equity in their business, also known as fully paid ordinary shares. So Birchal Financial Services, that's us, will be the licensed intermediary for the offer. And just to let you know, the information that's discussed in this webinar today is for informational purposes only and should not be considered as advice or a recommendation to invest. So please, I'd implore you to do your own research and always consider the offer document and the general CSF risk warning before investing. And if you'd like any further information about that, you can find it over on birchal.com. So for today, let's get into the good stuff, shall we? Matt's going to take us through a presentation, which will be approximately 15 to 20 minutes, all about Birchal, where they've come from, what they're looking to achieve today with their capital raise, as well as a recap of the performance on 2023. We'll then switch to a bit of a Q&A session. So if you look at the bottom of your Zoom screen, you'll see a little Q&A bubble. And if you've got any questions during today's session, please pop them in the Q&A box as we go along, and I will ask Matt those questions and we can get some answers at the end. We're also recording today's session, so if you do have to jump off early or you'd like to rewatch this another time, we will be sending a recording around. So please, without further ado, I'd love to hand this over to Matt. If you'd like to share your presentation, we can get into it.
Delighted to. And as you know, Em, it's kind of a big day today after a big finish last night. Lots of great, strong finishes for campaigns. Our kind of the end of our ordinary business for the year. How are you feeling?
I'm really excited. I was up until past 10 o'clock. I don't know if everybody on here is familiar with how the Birchal platform works. We always close our offers at 10 p.m. on Thursdays, and it was super exciting to see all of the businesses closing with these super strong finishes. So we're absolutely pumped, and it's just great to be able to go into December and have a new campaign running. Obviously, it's my favorite business of the year, Birchal. So absolutely love to see it.
Excellent. So thanks so much for the intro. And can everyone see that now? Yep, there we go. Sorry. As you mentioned, I'm going to go over at a really high level the funding opportunity that we have at Birchal, and part of the reasons why we're raising capital now, and the performance that we've achieved over the last couple of years, and a little bit about the outlook into 2024 and beyond. But also, given that we're substantially complete for the calendar year, many will be familiar that we prepare industry reports, a couple every year, the funded report at the end of the financial year and the yearbook report at the end of the calendar year. So I thought it was a good time to provide a little bit of an insight on at least where things are finishing up from a Birchal perspective now that the year is substantially complete, acknowledging that there are still offers closing on other platforms and one more on our platform too. But it does kind of give a good picture of what's been achieved through crowdsourced funding in 2023. But looking at this opportunity, the opportunity to join Birchal as an investor or join us again if you're already invested, we are a market-leading direct investment platform, and we've had greater than 70% share of what is a fairly new market in Australia since 2020. And 100% share of funding volume in the first quarter of this calendar year, and for the first half of this financial year, FY24, our market share in terms of funding volume is actually above 80%, which is quite remarkable. But in a platform marketplace business like ours, the opportunity for market leaders to leverage network effects is really significant, and it's something that we've been able to achieve fairly early in our journey and will inform our growth beyond here. We've developed a unique and growing relationship with Australia's largest network, we'd argue, of dynamic early stage investors and businesses that are looking for funding in a new and engaging way that works for them on their terms. Historically, we've been profitable and we demonstrated core business profitability pretty early in our journey. We're incredibly capital efficient at the start, and seeing the scope of the opportunity that is ahead of us in Australia, particularly based on overseas precedents, we've decided to invest in scale and efficiency initiatives, and that's really defined our efforts, those investments over the last couple of years. And these are designed to enable us to scale beyond our past performance, really being product-led in the sense that we're looking for efficient, tech-enabled where possible solutions to these scale problems that businesses at our stage have. But then also unlocking adjacencies, opportunities to add additional value to other members of our network. In terms of this quarter, we've closed 26 successful offers, and that's exceeded our best quarter ever, which was 24 successful offers in Q2 FY22. And this has also been a 24% increase to funding volume for the half that we're in now against last year. So it's been a really great improvement to what has been a pretty challenging time for funding over the last couple of years. As I mentioned, more mature markets overseas and their pricing structures demonstrate opportunities for Birchal to grow revenue, grow profitability, but also add additional value to members of our community, particularly available to us as market leader as we scale. And then a range of innovative product initiatives represent opportunities for us to do more. That we're solving a critical funding need, particularly in an equity capital sense, but this opens the door for us to be more involved in the lives of our investing community, but also the businesses that use our platform as well. So this is a high-level snapshot in numbers. Over 110,000 investments have been made on the platform since we launched in 2018. 248 deals, raising a total of $193 million. We hold the records for the biggest raises, the fastest raises. We've tested the platform ourselves. We've done it once. We're doing it again. We're among the first to be licensed, among the first 7 companies to be licensed to host CSF offers back in early 2018. And we've won a bunch of awards. We're an AFR Fast Starter last year, multiple Pause Awards, been nominated for Pause Awards again on Monday, fingers crossed. And in terms of the CSF industry, quite a remarkable achievement in FY23, successful crowdsourced funding offers. 85 of them exceeded ASX IPOs for the first time in a fiscal year. And in terms of market share, which is an outcome of our initiatives to grow the industry, looking back, particularly on this calendar year, as at today, it's approximately 75% of funding volume. And that's the figure there, 50.4 million in funding volume for this year. I thought it's worthwhile just to sketch out our ultimate ambition, and we are still a small business at the start of our journey, but being a marketplace business founded in Melbourne, we've definitely been inspired by the journeys of other dominant marketplaces that have grown up like literally around us here in Cremorne, and the likes of REA Group, Car Sales, and Seek. These businesses started to emerge in the late 90s. You would argue that browsing technology and the internet was really the technological advancement that enabled that disruption and those types of businesses to be created and to thrive, and also you derive a lot of their success from being dominant. And we are hopeful, and it's our ambition that Birchal will take a similar journey. And thinking about what has changed to enable us to do what we do, it's really this liberalisation of securities laws to uncover early stage businesses and startups as an investable asset class for a large audience of potential investors. And we hope that over time, people will look back at that as that critical watershed moment that enabled this disruption and this creation of another significant marketplace. So just at a high level, like the problems and challenges that we're solving for right now, from a business perspective, capital raising is time consuming and expensive, and many businesses, they don't know any investors, or they haven't done a lot of this in the past. They don't know how to raise investment. It might be something that is very unfamiliar to them, and having a process and insight in how to do it is extremely useful. And there is definitely a growing VC industry in Australia that and a network of angel investors that have been active and increasingly active over the last 10 years. But many businesses, although great businesses, are not appropriate for those types of funders because of the things that they need to look for, the lens that they look through when they're assessing opportunities. But that doesn't mean that there aren't many great businesses out there that are perhaps appropriate for other types of investors that have different goals or a different decision set when they're assessing opportunities. So what do? We help forward-thinking businesses raise capital by building communities online. And these are communities of engaged supporters that could be customers, could be people that are really drawn into the mission of what the founder is trying to achieve. And we do it with effective storytelling and modern media techniques like webinars and social media advertising. In terms of investor challenges, many investors or people that have a willingness or a desire to get involved in investing in this as an asset class might not be part of the startup ecosystem or know where to go to startup events and angel investing groups, but they're still interested in investing. But where do they find them? Until now, it has been pretty hard to find a lot of these investment opportunities because it has been heavily relationship based. Diversifying minimum ticket sizes is also a really big problem that I think crowdsourced funding is offering a compelling solution to. Angel investment rounds, minimum ticket sizes can be in the tens of thousands of dollars. It can be pretty expensive to achieve, adequate diversification in a portfolio with check sizes of that much. Yet on Birchal, offers can include a minimum ticket size, of often $250, which does make taking a portfolio approach a lot cheaper and, a lower entry point for lots of investors. So that's definitely, a benefit of crowdsourced funding. But information and getting access to information about offers can be hard in the private unregulated space. Systemized or standardized disclosure and communication is uncommon, whereas in our world a standardized form of disclosure definitely helps to improve the information that investors have available to them when they're assessing opportunities. But for many, it's a mechanism to just support brands and businesses that they're inspired by or that they like and that they're fond of. And in many regards, Birchal is appealing to a very real need on the investor side as well. So in terms of what we do, many people on this call will be familiar with a lot of the businesses that we've hosted. I've just kind of sketched out a few of these now. Many businesses that in times gone by might have considered an IPO process, as an example. Naked Life, the AFR Fast winner last year. We helped them complete a successful $3 million raise earlier this year. Montu, arguably the most successful company in terms of revenue achievement that we've hosted on the platform. They've raised $5.5 million across 2 offers, the most of any business to raise through crowdfunding. They achieved revenue of $98 million reported to investors in FY23, and that earned them the top spot in Deloitte's Fast 50 list for the second time running and the first time in history that a company has done this back to back. And that was against 100,000 in reported revenue at the time of their first offer in 2020 at a pre-money valuation of approximately $15 million. So, for the 2,500 investors that have backed Montu, I imagine they'd be, pretty happy with those recent results. And then Outcast, another example, we achieved a $2 million raise for it in March this year. Another really important kind of element of our community and the companies that have found success with our platform are purposeful businesses. And, I've just mentioned a few here. Zeroco, the first company to achieve a $5 million raise back in 2021. They achieved it in 7 hours. Mike Smith is on a mission to untrash the planet, and his super engaged community was really the reason for the success of that offer. Many people wanting to support businesses that are going to improve the world in some way and make it better. Anna from Kester Black, another great business, the first ethical cosmetics brand to be registered as a B Corp. So really privileged and delighted to host Anna's offer to invite her community of engaged supporters to become investors. And Lion Hydrogen is another one that I mentioned here. There's an increasing number of hydrogen projects, being brought to market in Australia now, which is great. But Lion Hydrogen, after raising a bit over $1 million in 2022 last year, they've announced plans to list on the London Stock Exchange. So another example of companies that have had success with crowdsourced funding, but then are kind of moving up the chain to do more interesting things. I thought I'd put this up here just to kind of provide a bit of an insight into the process, the capital raising process that we've been going through. our investment over the last few years, in the context of declining funding volumes, or not declining, but a lack of growth in funding volumes, given the challenging funding conditions, has created a capital need, and we felt that it was important to start a process of engaging with strategic investors, and it has been a very successful process in that regard. And we've identified many businesses and organisations that Birchal's community can add immense value to, and these are conversations that are ongoing, and they're consistent with our ultimate ambition of becoming a critical piece of financial infrastructure available for SMEs and startups in Australia to really support entrepreneurialism and make early stage businesses an investable asset class for all. So in terms of 2023, there's some key themes here, but rebuilding momentum was probably the most significant achievement. And when I get to the quarterly breakdowns, you kind of see that, to get to a position where we've closed 26 offers in a quarter has been nothing short of remarkable, particularly compared against other parts of the financial system and even within the crowdsourced funding industry. And this has been through, very deliberate actions at Birchal to rebuild momentum. I think the increasing interest rate cycle towards the middle of last year has, of course, in addition to macroeconomic factors, affected all parts of the market. And, we've seen drops in VC funding volumes. We've seen drops on ASX, certainly, muted IPO activity, or the IPO window being shut, certainly for non-resources businesses. But our ability to continue to deliver results and stay active in this market has been remarkable. And it has required a concerted effort to support businesses through this process, but also, a range of operational changes that have been made within Birchal to really achieve what is a stunning result in these conditions in the last quarter of this calendar year. So our share of funding volume improved, and looks like it's improved. I have to say that, there are results that are completing on other platforms, even on Birchal. Our raise is yet to be done, so yet to be included in these figures, but up 9% on last year in terms of share of funding volume, but approximately 82% in FY24 to date. So, a rebuilding of momentum, but beginnings of an accelerative period of growth. The average deal size improved as well. So 2022, despite some strength at the start of the year, really in response to this increasing interest rate cycle, saw a reduction in average deal sizes and activity on the platform. But I'm pleased to say that this has improved in 2023 to an average raise size of 905,000. So up 16% on last year, and similar levels to 2021, which has been our best year ever. And strong resilience in contrast to other parts of the financial system. And, there was a bit of noise made when we released our funded report and observed that CSF, successful CSF offers exceeded ASX IPOs for the first time. For 2023, based on our information, is approximately 33 ASX IPOs in 2023 to date, against 43 first-time CSF offers on Birchal. And I've kind of called that figure out because it's a like-for-like comparison. Importantly, about 25% of the offers that we hosted this year were for companies that were returning. So you could argue not, like-for-like with an IPO, they're follow-on offers, but even in like-for-like terms, 43 first-time CSF offers outpacing the ASX. I've sketched out our top 3 campaigns here. Canaponics raised $5 million, second company to do so in May this year. Medigrowth, another medicinal cannabis business, raised $3.5 million in August this year. And I mentioned Naked Life as well, raising $3 million in July earlier this year. And the stats as at today, Birchal, we've completed 56 CSF offers, raising 50.4 million in total year to date, which is a modest, perhaps insignificant increase on last year. And strong performance against other parts of the CSF industry. And I thought I'd just include here as well, there's a slight error on this chart. That should be 17.3 million for the last quarter, just for people that are watching this later. But this is the CSF funding volume across 2022 and 23. So you can see the first part of 22, there was still some strength in the market from the buoyant conditions that we were experiencing throughout 2021. But then when we get to Q3 of 22 and Q4, you can see that this has been a result of reduced average deal sizes as the effects of that increasing interest rate cycle and macroeconomic conditions were really kind of starting to affect the investing landscape and CSF industry. But we have seen a recovery, which has been tremendous, particularly with our results in this last quarter. And then completed offers. So similarly, if I look at Q3 and Q4, there were many deals that were still in the pipeline that were in the midst of a CSF process, but the outcomes that they were achieving were perhaps kind of not to their expectations. But we've seen a sustained improvement, and as I mentioned, some operational changes at Birchal to achieve a really stunning result in the last quarter of this calendar year. In terms of growing the CSF industry, I just thought I'd mention some of the policy initiatives that we're looking at advocating for in the coming year. It's been approximately 5 years that the CSF industry has been in place now, and by many reports, it is an increasingly accepted, reliable mechanism for early stage businesses to raise capital with appropriate consumer protections. It is a key piece of regulatory infrastructure that the government has put in place, and that is available to companies to make a regulated offer of securities. We believe it was always contemplated that there would be some expansion to the CSF regime, and that time has come or is approaching. And there are a range of things that we've been communicating with government, and we will continue to do so with more vigor in the new year, particularly given the results that we've been able to achieve for companies during a pretty challenging time for equity capital markets. And these range from improving incentives for companies and investors to use the crowdsourced funding regime. We were really pleased to read that the government's announced a range of initiatives for small and medium enterprises, match funding and the like. But we really think that this should be expanded. But from an investor side, there are many things that wholesale investors or tax incentives that wholesale investors enjoy for investing in early stage businesses and innovative businesses that retail investors can't access. And we think that that's perhaps unfair, given that early stage businesses are available as an asset class to retail investors now. So we think it's compelling to make an argument for the playing field to be leveled somewhat. Increasing the issuer cap from 5 million to 10 million. There is already a reduced disclosure document available to public companies to raise $10 million It's called an offer information statement. It's a cut down version of a prospectus, not as much as a CSF offer, but there is scope for modified disclosure or a reduced disclosure threshold to raise up to $10 million. But based on our observation, it is not a document that is used very often, and it still requires ASIC to be involved through an exposure draft process. I suppose our argument is that crowdsourced funding is infrastructure, efficient infrastructure that exists that can actually help companies use the things that are available to them. Expanding types of securities, perhaps debt type securities, options, safe notes, and the like. Currently, only fully paid ordinary shares can be offered under the crowdsourced funding regime. So we think that that's an important ask. And then options for secondary market liquidity are all things that we have been asking for, and we will continue to ask for as we pursue growth of the crowdsourced funding regime. I might just stop there, Em. I've been talking for a while, so I'm going to take a sip of water and see if there are any questions.
That was brilliant. I mean, I might be biased as a long-time lover of the company, but that was great. And I think your last slide might have actually answered a little bit of the first question that we have in terms of the secondary market strategy that you've had in place for a while. Can you talk a little bit more about how that's been progressing? Understand that obviously the secondary market is prohibited by ASIC's regulations, but if you could give a little bit more insight on that, that'd be awesome.
Yeah, for sure. We to operate a financial market requires typically a markets license, and if you've got retail investors involved, it's typically a tier 1 market license, which is the same market license that the ASX has. So it's a heavily regulated area, but there are some relief instruments available, and the low volume market instrument basically allows a market operator to operate a financial market without a license, provided that they don't facilitate more than 100 transactions or more than 1.5 million in aggregate turnover. We think that is probably one of several great mechanisms for companies to provide at least some liquidity to their shareholders and others that are interested in acquiring their securities. But I suppose we think about this in a company sense rather than a generalized market sense. We've piloted this initiative ourselves. We built some MVP technology and used the low volume market instrument. We set up a low volume market and ran what we call a virtual trade campaign after our first offer last year, and it was successful, and we facilitated trades. We have registered a second pilot opportunity, and we'll be looking to complete that second pilot soon. There are some scale challenges to this, and we think that the instrument needs to be looked at because proprietary limited companies now can have a large number of investors, and we're concerned that in some situations, companies that are using a low volume market might be put into the public company regime inadvertently. So there are a few things that we need to fix up on a regulatory front. There are, a few things that we need to work through from a technology front before it goes out to full release. And then there are also just market conditions. Many companies are, kind of preoccupied with running their businesses and, getting through what has been a pretty difficult time at the moment. So providing liquidity to their shareholders, might not be the most important thing from a company perspective at the moment, but in the main, this is something that we see as an opportunity and indeed really important for the industry.
Yeah, absolutely. I couldn't agree more. I think it's a really exciting prospect for us to have in the future for sure. So there's been a few questions around competitors and, how you guys intend to maintain and grow the position in the face of competition. Obviously, at the moment, when you're talking about owning such a significant market share in this industry, do you sometimes feel as though Birchal are, dominating this market, and it could be problematic in the sense that you do need to have competitors to keep the industry fair and just?
I suppose, although like market share is an outcome, it's not what defines our focus or our ambition. We are focused on growing the crowdsourced funding industry, and I think we've always run our own race. So, I don't think we ever measure our success really as against other operators in the market. We measure our success in terms of our own achievements and the targets that we set for ourselves. We see, based on the research of Andrew Schwartz, which was published earlier this year, and overseas market experience, particularly the UK experience, we see that the extent of the opportunity in Australia for crowdsourced funding could be between $500 to $700 million, and just in the core business sense. And looking at the pace of growth and the mature industries overseas, that is our ambition to achieve the full extent of the ambition for Australia and for businesses here. But we are hot in pursuit of that to grow the industry. So I see market share as an outcome, and it's not something that we're overly preoccupied by, even though you'll see it's a feature. It's often a feature of things that we put out there. We're happy for others to do well. Also, growing the industry is going to be a collaborative effort, but we're focused on growing the industry as big as possible and achieving great outcomes for the companies that are using us. And the market share, I suppose, is an outcome.
Yeah, absolutely. It's great to take the holistic approach in terms of the whole industry and be a real trailblazer in that sense. So I know that during your presentation, you mentioned a lot about scaling challenges and adjacencies. Could you go into a little bit more detail, and could you maybe give a little bit more insight on how you'd like to use the funds?
Yeah, so as a tech-enabled platform business, there will always be an investment in our technology, our business systems and processes. So we need to continue that investment to continue to improve the service that we're providing, provide more, host more companies on the platform, and grow the industry to the full extent that I mentioned before. So as a tech-enabled business, achieving scale should not be by adding headcount to the business, and particularly in an environment where new technologies are released every day. ChatGPT and the improvements that AI will give business operations over the future will help with all of these efficiency initiatives. I think where we get to, though, is we've grown this business over 5 years, and we're at the point where we have a pretty good understanding of what our fixed cost base and minimum requirements are to operate a business, a regulated business, at the scale that we've operated at historically. And we don't see that through investment in technology, and being smart about like how we're standardizing processes and really kind of delighting our customers, that we can scale beyond our past performance and not need to like add more and more people to the process. Unfortunately, you know, coming out of 2022, there was, you know, the industry was growing at approximately 70% year on year. Now, in contrast to other parts of, you know, the financial system, particularly equity capital markets, which have gone backwards during this period, the decline in funding volumes, but like, you know, even in Birchal's sense, you know, it's been approximately 50 million funding volume the last 3 calendar years. We've been able to be fairly stable through that period. So things have plateaued. You know, our business is not only seasonal, it is also cyclical, and we're at the down part of the cycle, but things can accelerate in, you know, quite marked step changes. And we feel that we're perhaps on the cusp of that next step change, which will give us, you know, growth again. And we need to be ready to, you know, to pursue that growth opportunity. So the continued investment in our technology, you know, has been important to put us in the box seat to pursue these opportunities when conditions improve.
Yeah, 100%. I think in terms of the technology, we've had a few questions around that. And is there any plans to potentially use blockchain or cryptocurrency as a registry and also issue notes, similar to how Republic is doing it in the US?
Yeah, look, we've observed with keen interest the development of the registry industry. We made a decision as a business when we launched not to build a registry service because there was enough that we needed to do and needed to focus on in building a crowdsourced funding platform. And, you know, there are a lot of innovations about the Birchal platform that are commonplace now, but perhaps didn't exist to the extent when we launched. The expression of interest campaign, you know, running short campaigns, momentum and scarcity. You know, spent a lot of time looking at and actually conversing with platforms overseas, and you know, I can say they're impressed by what we're able to achieve. You know, being able to close offers in days is something that is globally remarkable. But when we think about like blockchain and the back end and registry services, it's an area that strategically we are interested in, but there are many operators in this space as well. So I think we're looking to you know, make the right decision rather than, you know, add something to the market that perhaps others have built already. But absolutely, in terms of, you know, achieving a seamless experience, not only for investors, but for companies, it's something that we're looking at how we can do things in the most efficient way, but also do what we're really good at and allow others to do what they're really good at too.
Yeah, I'd say it's one of the few times that it's a real blessing that Australia is a bit behind the rest of the world, so that we can learn from their successes and their mistakes and grow from it to give the best possible service to people in Australia. So in terms of businesses that raise on the platform, are there any key metrics for businesses that are considering CSF, revenue, employees, and assets, things like that?
In terms of like suitability or companies that will host on the platform?
I would say a little bit of both. I mean, there's also some questions here about vetting companies that are raising capital via the Birchal platform. So obviously there's a variety of, as a campaign manager myself, I do see this every day. There's a variety of companies that come to the platform to raise capital. And some, I would say, are particularly more suited for a crowdsourced funding offer. It's always really valuable to have an incredible audience behind you who believe in and support your product or service. So in that sense, that's a really great thing to have behind you if that's, as a company, that's what you're looking to achieve. Would you add anything more to that, Matt?
Yeah, I think there are we've hosted offers for companies at, a wide variety of stages. I think in the early days, the vast majority of companies were pre-revenue or substantially pre-revenue. And that's shifted over time. I think over 40% of the offers that we've hosted on the platform this year and last year had greater than $1 million in reported revenue, so trailing revenue at the time of their offer. And the maturity of issuers is something that has just increased naturally over time. There are a range of things that we are doing as a platform to accelerate that growth of maturity of issuers. But there will always be opportunities for businesses that are in an earlier stage to raise through crowdsourced funding. But looking at the quality of these opportunities is something that I think we need to look at. But looking at Montu as an example, it was a very early stage business, 100,000 in reported revenue at the time of their first offer, and they've gone on to achieve amazing things. So it's always a fine balance between accepting that this part of the market is risky. It is as described. There are lots of warnings that investors need to be aware of and acknowledge through the process, and it does assume an element of failure or non-performance. But that is something that investors need to consider in the light of each opportunity. But increasingly, I think people are expecting some founders or some opportunities perhaps are not offered, and that's something that's always under consideration for us at Birchal as to tightening up like suitability and filtering considerations.
Yeah, absolutely. And in terms of this vetting process, if ASIC does extend the type of investment offers available to investors, do you think that will increase risks to investors?
Additional security types, I think is probably the question. Yes, there'll be additional, but probably more different types of risks, and these are the things that need to be considered when if ultimately the government is minded to add to the security types that can be offered, particularly if it's debt. Someone that's considering acquiring a debt security that's being offered, has a different set of risks that they need to consider. Absolutely, but it'll I imagine be considered through a consultation process and ultimately make its way to the legislation, if it's approved. So
awesome. In terms of raising capital through the Birchal platform, would you see it as a conflict of interest to participate in this Birchal offer and then down the track seek funds via the Birchal platform for a business?
For a business itself to invest in the offer and then be conflicted? It's an interesting question. I'd say it's a public offer of securities, so it is open to Australian investors. It's under the crowdsourced funding regime. It's a regulated offer of securities, and it's public. In terms of whether or not being an investor in Birchal or holding securities in Birchal will affect the level of service that someone will provide, someone will receive from Birchal, I think what I'd say is our gatekeeper process and our role as an intermediary is paramount. So I'm feeling this at the moment. I am the issuer, and the gatekeeper team is doing their job without fear or favour in putting me through my paces. So I imagine it's a conflict that that we'll be able to manage. But yeah, I couldn't say, and nor could you expect reasonably preferential treatment, because our gatekeeper role is paramount.
That was a great question, and something that I hadn't even considered myself. So thank you for putting that forward and answering that one. So currently, are you seeing any macro market forces such as regulations, poor economic conditions, etc., that could play against the CSF market and incidentally a player like Birchal in the future?
I mean, any more than what we're currently experiencing? I'd never say never. I think we're currently, we've experienced, if you just think about it, the war in the Ukraine, the war in Israel, inflation, the end of, almost 10 years of practically 0% interest rates to the fastest, accelerating rate cycle in recent memory. There's a lot that has been affecting financial markets and capital markets specifically. I think the last couple of years have been, an amazing stress test, yet another one, because we accelerated through COVID. We performed really well, and that was a huge inflection point for our business. And I think we're on the cusp of another one, because we've stood up to the test. We've shown that we can continue to provide capital to businesses when other parts of the financial system can't. And I say we, it's important to say it's not we enable it as Birchal, but actually it's the many people on this call and all of the others that have supported businesses. We're only able to do what we do because people having these opportunities and being involved in these businesses, and we're at the center of that. And this is a movement. This is a movement that people are responding to. We're a facilitator, and we enable that to happen. So there are always risks, and there may be more. I think it's really, it's hard to say, particularly what we've experienced over the last 3 years with pandemics and wars and inflation and everything. But that uncertainty in us being able to kind of stay stable throughout an uncertain period, I think is worth a lot in terms of the future resilience and reliability of this as a funding mechanism for entrepreneurs.
Yeah, fantastic. So I know that just previously you mentioned some general statements around use of funds being used for technology and AI, but are you able to offer any specifics? What are the key objectives that you're seeking to achieve with the tech upgrades? For example, you mentioned that in the annual report, you're doing a re-architecture of the platform. Are you able to explore that a little bit more?
Yeah, so look, I mean, in terms of this funding offer, we have a capital need. So we've, for the first time in our history, been burning cash, and we've not been profitable. We've annual report has been available to shareholders, but that's been as a result of investment into our platform. The business requires, based on what we feel are the minimum minimum settings, the baseline costs for the business, requires probably about 80 to 90 million in funding volume to be break even and profitable. The thing about our model is we have about 80% gross margin, so that means we can be disproportionately profitable once we exceed break even. But the reality is we are, we have been burning cash. So the use of funds for this raise is to, continue our operations, continue investment into our technology and refining our core business so we can continue to grow the industry and return to profitability. What I would say is, although we haven't kind of eliminated the burn this quarter, we are, very close to break even this quarter, which is, a marked improvement on what we've experienced over the last 12 months since funding volumes have reduced. Now, that was a call that we made to make sure that we had the team, the systems, and the processes in place to look through the cycle, because equity capital markets are cyclical, and it's important that we continue. And when the cycle improves, and I believe that we're on the cusp of that. Certainly in our part of the financial system, then we'll see an improvement to financial performance. But really, the point of the raise is to continue those operations. Yeah.
Awesome, thank you. At this point in time, are you thinking of exploring any opportunities for diversification beyond CSF operations? I know that there was the potential to have the trade platform as well that you mentioned earlier.
Yeah. Look, there are a range of adjacent opportunities available to us. I think the lens that we always have to look through is, is it supporting our mission of growing early stage businesses as an asset class? But there is, so part of that is primary capital, so additional security types. Another part of that we kind of talked about, like registry and trading, in the secondary market space. Infrastructure, kind of, making the various transactions that are required as frictionless as possible. But, we needed to take a step back and focus on, when we saw that it was going to be important to make sure that we were still able to sustain performance in the face of challenging funding conditions. We decided that we really needed to focus on optimizing our core business and focus on that. And those goals have been achieved. Once we've, got a more kind of sustained improvement to our core business, pursuing adjacent revenue opportunities will become kind of more of a near-term focus for us. But the challenge with being in a business in the position like ours is there are many things that you can do. The critical thing is focusing on the right things to be doing. So certainly the last 12 months, the right things have been to focus on our core business and make sure that we've built the solid foundations that can scale us, and then looking for adjacent opportunities that reinforce that core business but are compelling in and of themselves. So there's no kind of short near-term answer for this. I think we're demonstrating a lot of confidence in the market that we're still able to stay open. We need to focus on doing our core business as well as we can, as efficient as we can, as profitably as we can, and then pursue adjacent opportunities when it makes sense.
Yeah, absolutely. So obviously there's a lot of benefits to crowdfunding, and you've reinforced them during this talk. And it's obviously a great option for us as Birchal to, host Birchal on the platform. Can you say whether you've sought funds through other avenues as well, as naturally that would be a consideration for a company?
Yes, absolutely. Like any business, and as I mentioned before, like this capital raising process, like our last one, when we raised capital on our platform the last time, and this is our advice to any company, is you should be engaging with investors well in advance of your CSF offer. Really, you should always be building relationships with investors. We took the opportunity, once we'd identified that we had a capital need and we've decided to keep building and keep investing in the platform, this belief that we can actually grow this industry and take it to its full extent. We had started conversations with strategic investors. So, in terms of this process, this CSF offer is the culmination of that capital raising process. They're, not mutually exclusive. They actually support each other. So we expect that the investors, the strategic investors that we've involved in the process to date, will participate in the CSF offer. So, like many businesses, they're not mutually exclusive if you're thinking about equity capital. From a debt perspective, we've thought about that as well. We don't have any debt as a business. Now, that's a positive and a negative. But, we've considered that and continue to consider that among a range of funding options. But this is right. This is what we do. And this is another opportunity for us to show, how useful and crowdsourced funding can be, particularly in challenging funding conditions like we're experiencing.
Absolutely. So as a licensed intermediary, what's the due diligence process for accepting companies to undertake CSF via Birchal? Is there a risk for Birchal that they take on if the company on the platform were to, for example, take the investors' funds raised by the platform and not deliver on the promises, or undertake any illegal activity in the future post CSF raise?
Is there a risk to Birchal? I mean, look, there's always a risk. In terms of the liability or Birchal's, statutory obligations, as the intermediary is fairly prescriptive in terms of what we need to do. We need to do background checks on all directors and senior managers. We need to publish the offer document, and that includes making sure that it meets the minimum content requirements. It's not misleading or deceptive. We also have, a requirement to observe and intervene if we see that marketing of a CSF offer is misleading or intended to mislead or deceive. So there are a lot of those things that really kind of define our role as an intermediary in completing that gatekeeper process. Post the raise, what a company does, is it's really a matter for it is not within Birchal's control what a company does post the raise. So that is a risk that we kind of need to assess in the context of our reputation when we're working with businesses. And it's something that, is always at the forefront of our mind and needs to be increasingly so. But, in terms of, and Andrew Schwartz, Professor Schwartz, has a nice kind of like metaphor for this in terms of, robbing a bank in the snow. Like if, people were kind of using the crowdsourced funding regime with an intention to deceive people, it's actually a pretty deficient mechanism to do so, because it's like robbing a bank in the snow. You leave the bank and you're leaving a trail behind to, show exactly where the person is. And I think that's probably the point is, this is a rules-based regime for raising capital for what has traditionally been a pretty opaque part of the financial system. It's not the case that retail investors have not been investing in early stage businesses before. They haven't been able to do it at scale, and they've been doing it without the rules-based framework that crowdsourced funding provides. So, I think it is definitely an improvement in terms of, the net benefit as an asset class. From a Birchal perspective, we need to remain vigilant that, we're kind of going through our gatekeeper process effectively, as we always do, but then adding additional safeguards and looking at companies that we're hosting on the platform.
That was a great answer, and something I think we come across every day in terms of trying to provide an offer that is great for investors, essentially. I know you've answered this a lot of times in your career, Matt, but where did the name Birchal come from?
The domain was available, so that was helpful. Look, we went through a branding exercise and decided to choose a name that was somewhat devoid of meaning, that, we didn't want to use name that was overly descriptive. We felt that we wanted something, we wanted something that was devoid of meaning when we launched, so we could fill it up with whatever was important to us, and indeed have our community fill it up with whatever was important to them. In the context of the branding exercise, though, we went through a brainstorming session of Australian innovations, and talked about Ben Lexon and the winged keel that they used to win the America's Cup, and the Hills Hoist and other things. And we came across this story about a guy named Jay Birchal, who owned a stationery store in Launceston, Birchal's, which was still there until relatively recently. And he invented the notepad. He's credited with inventing the notepad. So it's said. So we thought it was a cute story. But he's Birchal with 2 L's, Birchal with 1 L. The domain was available, but it's proven to be the right strategy. I think Birchal means something to many people, and it can mean different things to different people, which is good too. I wouldn't say that we've set out to build a purposeful platform, but many people see us at the start, certainly at the start, but we've had lots of businesses that have had great outcomes, purposeful businesses that have had great outcomes on the platform because of some of the early successes like Park, and then Zero Co and Kester Black and lots of the others, CBIN. And, it means something to people, and that's really nice. And, as a founder, like seeing that, you've kind of created something that becomes meaningful to people, and people find useful is incredibly inspiring. And we kind of like let people fill it up with what it meant to them.
If I had $1 for every time I typed in Birchal and it auto-corrected to have a second L, I'd be very wealthy right now. Equally, if I had $1 for every time somebody mispronounced the word Birchal, that'd be great.
Yeah.
So currently, do you have any annual statistics on how many companies that you accept versus turn down to go on the platform? And also, do you have any statistics on how many companies that actually progress with an expression of interest campaign actually follow through to having a successful offer?
I mean, look, we do. We don't typically publish these specifically. What I'd say is that the entry point to our pipeline is an eligibility form typically, and but there are other ways that people get in. I mean, everyone needs to complete an eligibility form. So we kind of look at that and then look at the amount of offers that we host in a year. And I'd say it's probably less than 5% of companies that come in as an entry point and complete an eligibility form that we'll actually host an offer for. But the percentage perhaps could be lower because many don't complete an eligibility form but are still interested and have some interaction with the team as well. So that's probably the best that I can answer that. In terms of companies that open an expression of interest campaign and then proceed to an offer, that don't proceed to an offer rather, it's about 80% that proceed to an offer, in broad terms. That's been kind of fairly consistent over the last couple of years, but we don't publish these statistics, so I'm kind of not quoting exact figures, but that's the rough rule of thumb, and that's okay. As a mechanism, the expression of interest campaign is incredibly useful for people to get out there and get market feedback. Tell a story. Is it responding to people? And then they can make a decision with our guidance as to whether or not it makes sense to proceed to an offer. This is, I think, one of the really powerful things of what we've built is opportunities for people to get out there, have conversations and get information, and then make decisions based on data.
Yeah, fantastic. I know we've got a little bit over an hour. I've just got one more question that I'll pop through and then we might wind things up. But currently, how many companies have gone ahead to an offer campaign and not been successful? Do you have those statistics?
I don't have those to hand, but in a similar way, the rule of thumb it's above 90%, perhaps above 95% that will complete a successful offer. The reason for that is companies do a lot of work during the expression of interest phase that they should know how their offer is going to perform before they open the offer. I'd say that the 5% or 5 to 10% that don't complete a successful offer, that is, don't get past their minimum target within the offer period, it's often because they've not tested their the final presentation of their offer, like the draft offer document, and their settings, their minimum target, and their valuation with investors before opening their offer, and that's critical. It's critical that companies use the expression of interest campaign as a price discovery process and listen to investors. And I think some of the biggest reasons for failure is that they've missed that that final step, that towards the end of the expression of interest process is really kind of listening to what investors are telling them about the opportunity and whether it's compelling or not based on the settings that they're presenting.
100%. That's a great answer. We've had another one. This might be a little bit harder to measure actually in terms of metrics, but it's how many companies who have gone through and had a successful offer have not been successful as a company moving forward after CSF.
That's a hard one to answer. There have been a few, an increasing number, over the last little while. But it's hard for us to track these statistics. But then also, like, it can be hard to define failure as well. Like, it's one thing to enter administration; it's another thing to not achieve the full extent of your business performance, or So I can't answer that question statistically. But what I would say is that they're over time as an asset class, like, it will be a bell curve of results that there'll be at one end businesses, a small portion of businesses that have done spectacularly well, and then large cohort of businesses that do reasonably well, and then another group of businesses that perhaps don't achieve the full extent of their ambition. Yeah.
Fantastic. Thanks, Matt. I think we'll wind it up there for today. If anybody does have any further questions that you might have forgotten to ask Matt today, you're welcome to reach out via the Birchal platform. There is a little button there so you can shoot Matt a message. And if you do want to rewatch anything or might have missed anything today, we will shoot you through a recording so you can watch it in your own time as well. Thank you so much for your time today, Matt. We really appreciate it. We really appreciate the amazing questions from everybody. Thank you so much for your engagement.
Thanks, Em. Thanks, everyone.
Take care.